Okay, so let's first understand what is the meaning of residual income. So if you typically look at an income statement, okay, which would be sales minus all the operating cost, which would give you operating profit. We call this as EBIT. Minus interest will give you EBT, and minus taxes will give you EAT. So from an accounting perspective, each and every cost is well taken care of based on the accounting standards. But from a logical perspective, company does not deduct one very important cost. Can you guess what is that cost? Cost of equity. That a company would typically have its capital funded in the form of debt or in the form of equity. Whatever is the cost of debt, that is charged to income statement in the form of interest. But then, since there is no legal requirement to pay any cost to equity, we do not reduce it in the accounting perspective. But from an economic perspective, of course, these funds are not coming free. So when you charge cost of equity to profit after tax and you say less equity charge, then what you get here is economic income, or rather than calling it economic income, simply say residual income, or this concept has also been called as economic value added. So EVA and residual income, both of them are same concepts. Okay, so in an Indian framework, reporting EVA is not mandatory, which means it is not compulsory for a company to report EVA into its financial reports. So there has been a lot of research which has been done, and what researchers have found is there are about 37 to 40 companies in India that actually report EVA out of all the universe of listed companies that we have. Economic value added. Okay, so let's do an example and let's do understand multiple. Yes, it's same as economic profit, but we don't want to call this as economic income. Why? You would understand that when we go to corporate finance, but we can call this as economic profit. Are we good to move? So let's build an example. Let us say a company has got total equity of 100 lakhs and debt of 80 lakhs. Cost of debt is 12.5%. Cost of equity is 15%. Tax rate is 20%. Sales 100 less operating cost 20, EBIT 80, less interest, how much? 10, which will give you EBT 70, less taxes. Taxes would be 20%, which is 14, which will give you earning after taxes of 56. This is the income statement. What we want to calculate now is the economic profit of the organizations, and we are going to do that using different formulas. So formula number 1, just to prove that all of the formulas actually end up to the same thing. So formula number 1 is net profit, which is earning after tax, minus equity charge. Okay, so let us calculate that. Net profit is how much? 56, minus equity charge. How much would that be? 15. Though as per the law we don't have to pay 15 to these people, but logically the cost of this amount is 15, and therefore how much is your economic income? 41. So this is formula number 1. Are we clear with this? The second formula is called NOPAT minus $WAC. Now there are two ways in which NOPAT can be calculated. The first way of NOPAT calculation is EBIT into 1 minus T. What is the full form of NOPAT? Net operating profit after taxes. Have you heard of NOPLAT? What is NOPLAT? NOPAT is net operating profit after taxes, and then there is something called NOPLAT. What is NOPLAT? Anyone? लिख लो कहीं पे in the section notes. NOPLAT is net operating profit less adjusted taxes. Net operating profit less adjusted taxes. No. This NOPAT right here. How much is your EBT here? 80. If I use the formula 80 into 80%. Following this? So NOPAT would be how much? 64. So that's how you get NOPAT. What have we done? We have said 80 minus 16. Whereas how much are your actual taxes? 14. So we are reducing a larger amount of tax. We are reducing a larger amount of tax here. We are reducing a tax of 16. ठीक है? NOPLAT में क्या होता है? You don't have to do NOPLAT directly in this reading. NOPLAT में you say that it doesn't make sense to reduce larger taxes. So if you reduce only 14 here from 80, then the number that you'd get would be called as NOPLAT, adjusted taxes. इतना क्लियर हो गया आपका? सो NOPAT क्या है? 80 माइनस 16. 16 कहां से आया? 20% ऑफ EBIT. बट इन रियल लाइफ डू वी पे टैक्सेस ऑन EBIT? नो, वी पे टैक्सेस ऑन EBT. So when you charge taxes on EBIT, the amount of tax is going to be higher. So EBIT minus directly the tax, reducing higher tax, that number is called NOPAT. But if you reduce the actual amount of tax that you're going to pay from EBIT, then that number is called NOPLAT. Net operating profit less adjusted taxes. ठीक है? अभी NOPLAT इतना समझ के इसको छोड़ दो. Let's leave the NOPLAT here. We don't need that. What we need here is NOPAT. So one formula is EBIT into 1 minus T. Second formula is, anyone? What is the second way in which you can get the same number? Profit after tax plus after tax cost of interest. So let's try if it works. Profit after tax is 56. How much is your interest? 10. 10 into 8. 80%. So that would make this as 8. And how much is this? 64. So नीचे से ऊपर जाओ. Go from here to here or go from here to here. The answer is same. Two ways in which NOPAT can be calculated. Please ask questions. Is this clear? Any question up to this? Anyone? No. Should we move on further? Let's calculate. Once we finish the whole calculation, then we are going to expand this into smaller parts. You will appreciate that better then. So as of now, the interpretation of NOPAT is that had there been no concept of interest per se, had there been no interest at all, and had EBIT been my whole profit without interest, then because of taxes I would have been left with only 64. That's the significance of notepad as of now. कि 80 पे ही अगर मैं interest 0 होता, 80 पे if I would have been paying taxes of 16, my profit would have been 64. At this stage, this is the logic. Are we good to move? Let's calculate dollar WACC. Dollar WACC के लिए first thing that we'll have to calculate is WACC. So let's quickly calculate WACC. WACC is going to be 80 by 180 into 10 plus 100 by 180 into 15. $12.78. Okay. So WACC is 12.78% into total capital of 180. $23. So minus 23. 64 minus 23. And how much is that? 41. So from both the sources, the economic value added or residual income that we are earning or what we are getting is exactly same. Is that clear? Now let us break down further and let us break down this NOPAT and WACC into smaller components to build a larger understanding that exactly what is happening here. See this, to get that number of 41, what we have done is minus equity charge of 15, and this is how we've got 41. What this formula is doing is the same calculation. Okay, let's observe that carefully how it is being done. We started with EBIT. So how did we get EBIT? Sales minus operating cost was EBIT. So that's how we get EBIT. From EBIT, we reduced higher taxes than we have actually paid. Let's see how. Sales was 100, operating cost was 20. So we get EBIT of 80 here. Now the amount of taxes that we have paid is 14. But here we have reduced taxes of how much? 16. So we have reduced 2 worth of extra taxes. From this we are reducing dollar WACC. Dollar WACC is made of 2 parts. Dollar WACC is made of cost of equity and it is made of cost of debt. Cost of equity is 100 into 15%, which is minus 15. Cost of debt is 80 into 12.5%. No, 80 into 10%. So which is 8. And calculate this. 100 minus 20 minus 16 minus 15 minus 8. Tell me how much. Again 41. So 80 minus 16, which is nothing but 64, and 15 and minus 8, which is nothing but 23. So this will give you 41. See, it's the same thing. जो income statement में है, this formula is doing the same thing. What changes it is making is, it is reducing higher amount of taxes of 16 rupees, but it is reducing lesser amount of interest of 8. The actual interest was 10, but instead of 10 it reduced interest of only 8. But then actual taxes were 14. Instead of that it reduced taxes of 16 and they got nullified. So what this formula is trying to tell you is your actual tax expense is 16. But your actual interest, though it looks like 10, it's actually only 8. Please ask question if it's not clear. Should I repeat any part again? No? Then just write down the breakdown and then we can move on. No, 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 no. No, no. This is not about deferred taxes. What it means is, on accounting income statement, your taxes are appearing 14, they are appearing less. But from an economic perspective, you're paying less taxes because you took interest. Had you not taken interest, it's 16. Interest appears to be 10, but it saved you 2 of taxes. So logically, this should have been 8 and this should have been 16. Any part you want me to repeat, please be honest. Back calculations, no pad calculations. So if you've understood this, 50% of your part is done from this reading. Any questions you want to ask? But if you haven't understood this, you're not going to understand anything what follows after this. I'm really serious about this because you need to be crystal clear what's happening here. The main crux is that on the income statement, a company does not reduce cost of equity. So in an economic value added statement or residual income statement, we reduce that cost of equity and we get economic profit. Okay. Now there are different formulas of getting that economic profit. First formula was simple, net profit minus cost of equity or equity charge. Second formula is NOPAT minus dollar WACC. NOPAT can be calculated in two fashion. First is EBIT into 1 minus T, or second, profit after tax plus interest net of taxes. Both of them would give you same answer, and then that gives you economic income or residual income. Are we good here? So let's stop for a break.